As inflation remains at the top of the minds of business owners and consumers across the country, there are even greater concerns now over the possibility that the nation is headed into a recession. With wages not rising fast enough to keep up with rising costs, from gas prices to a carton of eggs, it has made it a tough choice for consumers when it comes to spending. Now, the Federal Reserve just announced this morning that they are raising interest rates for the third time this year, a whopping 3/4 point boost. It is the highest hike since 1994, and it's all in an effort to get inflation under control. Joining us now is financial advisor Dennis Brewster. Dennis, thanks so much for being with us.
Yeah, thank you for having me, Lindsay.
So the past two rate hikes that were in March and in May were relatively low compared to today's announcement. Why did the Federal Reserve take such a big leap this time around?
Well, it's a good question. The first two hikes that you mentioned were 1/4 point. And the Fed, at least initially, when they've hiked rates, they've never done more than 1/4 point initially. So that's kind of par for the course. But they also know that they're behind the curve with inflation, and they've got to try to get it under control. So they were talking about a 1/2 point today. There was also rumors that they would go a full point, but I think they said, we'll meet you halfway, and they decided to go 3/4 point, and then they'll see what happens from here before they make their next decision.
So a lot of people still wanting to understand how this new interest rate hike affects business owners and consumers.
Mm-hmm. Right. That's what, people hear all the noise, but at the end of the day, they really want to know, well, what does it mean to me? Well, the big thing that it's going to impact right across the board, businesses and individuals, the cost of borrowing is going to be higher. And I think probably the easiest place you can see that is in the mortgage rates. They've gone from probably somewhere right around 3%, give or take a little bit, at the beginning of the year to right now close to 6%. In terms of what that means, say somebody was going to get or planning on getting a $500,000 mortgage, your payments at the beginning of the year would have been around $2,100. Today, that same mortgage, your payments are going to be around $3,000. So, that's going to take a lot of people out of the market, out of the real estate market. So that's probably the biggest thing that most consumers can see right away.
How much longer do you think it'll take to get the nation back to the pre-pandemic stability?
It's going to take some time. When you're in the middle of these things, it always seems to take longer than it does. The Fed has now said that their goal is to maybe raise the Fed funds rate to 3.5, 3.75 by the end of the year. So, it's a wait and see. They make a decision, they see what happens, they see how the economy reacts, and they're trying to balance. They've got to get inflation under control. They know that, and that's their first objective. And on the other hand, they're trying not to go too far where they push us into a recession. But, you're probably looking at, at least the next 6 months for them to get this under control. And, it'll be difficult. It's never easy. But you also don't want to lose sight. They've been down this road before, and the economy's been down this path before. They will get it done, and we will get this under control here at some point.
Bottom line, Dennis, we saw the rate hike today. When is the next time you think that we might see another rate hike?
Well, the next time is scheduled for their July meeting at the end of July. If for some reason they felt, the numbers that they see coming in aren't coming in as they hoped between now and then, they could do it early if they want, but right now it's scheduled for the end of July, and it's unlikely they would do it before then, but they could. It's not, wouldn't be unprecedented if they did.
All right, financial advisor Dennis Brewster, always a pleasure to talk to you and get your insight. Thank you.
Yeah, thank you, Lindsay.